Hello and welcome to our Scotiabank and M&P event. My name is Maria Anakini and I am the National Director for Healthcare Professional Banking at Scotiabank, and I will be your co-moderator for today's event. Today we'll be discussing purchasing a practice and real estate considerations for healthcare professionals. Before we get started, just wanted to remind everyone that this event is being recorded and will be available for viewing in the coming days. Also, should you have any technical difficulties throughout the event, please email webcast.support@scotiabank.com, or you can type your question in the box on the right-hand side of your screen. That's webcast, webcast.support, SUPPORT@scotiabank.com. We also have a toll-free number that you can dial into at 1-888-407-6830. So we have a great agenda for you today. I'm very excited to be here with M&P, who have been great partners. We've collaborated with across various events nationally. A lot of great questions submitted by all of you when you registered for today's event. And we formatted our event around panel discussion to respond to those questions that were submitted by you. This is definitely a topic that is top of mind for many professionals today. We've also allotted some time for Q&A, so you'll have the opportunity to submit questions for our panelists at that time. And to submit your questions for the audience that's on webcast, please select the chat box in your screen and type in your questions. And for those of you who are joining us, the dial-in line, please email your questions you have to emilybird@scotiabank.com during the session. And that's Emily, EMILY.bird, BIRD, @scotiabank.com. Also, a post-event survey will be shared with everyone. You'll also have an opportunity to send us any follow-up questions after that. And now it is my pleasure to introduce Jason Charlebois, Senior Vice President, Small Business Canadian Banking at Scotiabank, for a few opening remarks. Thank you.
Thanks so much, Maria, and welcome everybody. Thank you very much for making some time today to join us for this special event. As Maria said, I'm the Senior Vice President for Small Business and Healthcare and Professional Banking here at Scotiabank. And I really want to especially thank our partners at M&P for co-hosting with us. As Maria said, we do lots of things together, and we think we really got an exciting agenda here for you today. So thanks again for making time. As professionals, you have all, and as business owners, you have all had a very challenging time with opportunities and different implications on your businesses and your practices over the course of the last 18 months. And today's discussion, I think, is really topical because you might be here because you're considering purchasing a practice. You might be thinking of an expansion, a commercial real estate purchase, or wondering whether or not you should buy or lease. So today our panelists are going to be able to dive in deep with you on that. Both the experts from M&P and Scotiabank Healthcare Banking will share current trends and their experience in serving the needs of professionals like yourself in this space, both over the pandemic era of the last 18 months and obviously the decades of experience we've had before that. At Scotiabank, we understand your industry. We're proud to be a market leader in banking solutions for professionals like yourselves, and we have over 30 years of serving healthcare professionals specifically. Our national team of dedicated healthcare specialists understand the unique needs that you may have and are there to help guide you in your career to the outcomes and the goals and dreams that you all have. And lastly, I'll talk a little bit about the Scotiabank Women Initiative. Some of you may have heard about it, but if you haven't, it's a signature program that we've curated and designed to increase the economic activity and opportunity for women or non-binary to be successful now and in the future. And how we do that is providing access to capital and tailored solutions, bespoke specialized education, and holistic advisory services and mentorship. So the Scotiabank Women Initiative really helps break down the barriers to empower women to succeed in business on their own terms. And with that, I'm going to wrap my opening comments, pass it back to Maria, and I really hope you enjoy this event. Thank you very much for joining.
Thank you, Jason. And now we're going to shift to our panel discussion today. It is my pleasure to introduce our panel of experts. Firstly, I would like to introduce my co-moderator and host, Calvin Carpenter, Vice President, Professional Services, M&P. Welcome. How are you doing, Calvin?
I'm good. Thank you, Maria. Thank you very much for the invitation today.
No, our pleasure. And on our panel today, we have Am Litter, Senior Vice President, Tax Services at M&P, Andrea Chan, Regional Managing Partner, Toronto North, M&P, and last but not least, Tom Apostolos, Director and Group Lead, Healthcare and Professional Banking, Eastern Canada, Scotiabank. Welcome. It's great to have all of you here today. So, Cal, like the world has changed, and COVID has really forced everyone to reevaluate and focus on operating in this new environment. In particular, our healthcare professionals have had to adapt so they can deliver the critical health services that we all need. At the bank, we've been supporting healthcare professional customers through practice shutdowns, slowdowns, reopening, retrofits, and now seeing a lot of interest in growth opportunities. Cal, could you share with everyone what are some of the things that you're seeing on the M&P side?
Good question. So certainly from our end, so we service, once again, professional clients all across Canada as well. So approximately 16,000 professional clients. I guess some of the key things that we have seen over the last year and a half in particular is that, first of all, the professions are very resilient. So all of them have come back strong from COVID. We've seen good numbers in terms of revenues and in terms of profitability. And so that certainly has been very much a plus for all of those clients. The second thing we're seeing is that there is a lot of interest in the professions as a business. So whether you take a look at, let's say, the dental business, where we've seen Canada's first public offering in the dental sphere, or whether we're seeing activity on the veterinary side or the retail pharmacy side, or even on the medical side. So we are seeing a lot of activity in terms of investors, certainly for cosmetic medicine. And certainly what that has led to is an awful lot of transactions. So we have seen, especially over the last year and a half to 2 years, a real increase in the number of sales and purchases of these professional practices. So it's been an interesting year and a half, and certainly I expect there to be lots more interesting things coming up as well.
Well, thank you, Cal. And that brings me to my first question for the panel. I'll open it up. And maybe, Andrea, you can answer this one. What is it? What's driving this increased interest in purchase of practices?
Yeah, great question. I think the increase in interest is really driven by a combination of lots of different players being interested in buying practices. We have our typical associates wanting to own their own practices and work for themselves after they've gotten some experience. We have our foreign trained dentists immigrating to Canada and really ready to own their own practices right away because they have the experience from their previous country. We also have, current owners who want to invest their money in something that they know how to manage well, which is, typically another practice as opposed to, putting it into the stock market. And of course, we all know that there's large consolidators, who continue to want to grow by bringing in more practices to really generate, great cash flows and steady cash flows and returns, for their investors. And seeing that, a lot of the consolidators have been getting really strong valuations. We have seen other professionals and investors really wanting to, form their own consolidation models, as well, which really add to the demand of practices. So as a result of all of these, potential buyers, the demand of practices, still remain really, really high, which means a lot of competition and therefore keeping the price of these practices really high. We know at the start of the pandemic, we certainly saw like a lull in terms of practice purchases and purchases being put on hold. But like Cal mentioned in the beginning, competition for purchasing practices has really bounced right back.
Seeing a rising interest also on our side. So thanks for that, Andrea.
Maybe I'll ask you a question. So certainly in terms of this increased activity for purchases, what impact has COVID had in terms of how the bank looks at lending? And what impact has that had on people who are looking, obviously, for financing?
Sure. Thanks, Cal. Glad to answer that. Well, during the initial period of COVID and presently, our financing and support has really not changed much. We continue to prioritize in financing our healthcare professionals and as well their practices. And not only have our professional programs not changed, in fact, recently we've even continued to enhance them further. For example, some key programs that we continue to offer during COVID were startup financing, in which many associates in different practices took advantage of. We also continue to provide premium financing and now even offer equity takeout programs, and are continuing as well supporting our construction financing, as we have seen an uptick in the market with many more professionals looking at these projects throughout the country. Furthermore, another initiative during COVID was that we increased our point of contact with our clients by launching a massive outreach program. This resulted in servicing more of our healthcare professionals during this initial COVID period last year. For example, we took the time to look at their existing terms, their existing amortization, and other options that are available to them for their cash flow requirements. Lastly, we made sure that our professionals were aware of all the government relief programs that were available to them. We fast forward to today. As mentioned, we are now witnessing a growth. And with our healthcare professionals, they've seized and increased opportunities to consider commercial real estate purchases. And as well, they're exploring practice purchases. I have to say, moving through, living with, and managing through COVID, our bank continues to put a priority and key focus on providing these financial solutions for our healthcare professionals. In terms of financing, we continue to look at our clients in a similar manner as we did pre-COVID, and we will discuss this and elaborate a little later today. So thanks for the question, Cal.
Thank you. I'll turn it over to Maria now for the next question.
This one, commenting that we saw some of the questions that came in, and Am, I'm gonna ask you this one. What impacts income taxes have had concerning all this activity? And what might a purchaser expect in terms of transactions going forward, given all the tax changes?
Yeah, thanks, Maria. So good question, timely question. So I don't have a crystal ball, so I don't know exactly what the changes will be, but there is speculation that tax rates will increase in the future. And, that may push sales of practices to either close sooner before any potential rate increases, or on the other end of the spectrum, it might push sales out longer. So if you have a professional who requires a certain amount of funds to exit or retire from their practice, they may push that sale out further to get to that same number because the tax rates are higher. And there's also a few new pieces of legislation that have come into play. So in April of this year, in the federal budget, there was this enhanced write-off or immediate expensing available for certain depreciable assets. It's about up to $1.5 million. And so when you look at the purchase and sale of a practice, vendors are wanting to sell shares because they want to use their lifetime capital gains exemption. And the dichotomy is that a purchaser wants to buy assets because they can write most of those assets off. With this new measure introduced, there definitely more of an incentive of purchasing assets. And so, an opening volley on a negotiation from a purchaser's side will most likely be purchase of assets. And right now we don't have legislation around these rules, so we don't know the details, but it is something that is interesting. And then you look at the vendor side, and if the tax rates were to increase and a vendor has their capital gains exemption, then there's more motivation for them to use to have a sale of shares, use their capital gains exemption. And so they're at odds, and even more so than in the past. And I think we would say that the vendor would likely prevail just because of the market is really a seller's market right now. And the last piece is you might have heard Bill C-208. And really what that is quite helpful in a family transition plan. And it really brings a family transition having the same tax impact as having a sale to a third party.
Thank you, Anne. That's very insightful. Cal, over to you.
Thank you. Andrea, I know we had talked about, both you and I had talked about how there's this increasing number of transactions that we're seeing in the marketplace, and certainly Tom had also talked in terms of how the bank has really worked to to address any concerns that their borrowers have had. You've seen all these increases in activity. Do we see that as well in terms of real estate? So perhaps people are looking at purchasing retail pharmacy or a dental practice and also looking at the related real estate. Do you want to talk a little bit about that?
Sure. I think, it really depends on whether the option to purchase the real estate is on the table. What we're seeing is that when there is the option to purchase the real estate, we find that most purchasers actually do take that opportunity to purchase the real estate. And of course, like, there are pros and cons to making that decision, and it's very, very personal. I know that when we're looking at that option with our clients, the first thing we always look at is the impact on cash flow itself, and ultimately how that compares to if they were renting the real estate instead. And the nice thing about owning real estate is that you don't really need to think about negotiating the lease for your practice. And we know that at least in the GTA, demolition clauses and relocation clauses have been pretty prevalent in terms of new leases being signed, which in the short term could make it really difficult for a potential buyer to get financing. Or in the long term, it could really devalue your practice value when you want to sell. So that's one aspect of it. The other things we look at is really the practical day-to-day considerations in terms of whether our clients want to be a landlord in the first place. Which in theory means that if there's an issue in the building, you have to really take care of it and manage it yourself. And some of our clients may not want to do that. And looking out, further into, even potential retirement planning options, some of our clients really like the idea, right, of owning real estate as part of their retirement portfolio after the sale of their dental practice, which does give you, owning the dental building now, or the medical building could really help, giving you that option. And what people seem to like is to have the steady stream of cash flows on a monthly basis from a dependable tenant that they know, and potentially, again, having some upside if the value of the building goes up over time.
Thank you. And certainly we would see that professionals generally are good tenants. So commercial landlords do like professionals because they tend to stay where they are, for that matter. So I'm going to turn it over to Maria. I know she's got some follow-up questions.
Yeah, for sure. Thanks, Cal. And just to expand on Andrea, thanks for that, Andrea. Maybe Tom, you can give a bit of a banking perspective and the differences in the bank's financing of professional practices versus an owner-occupied real estate scenario.
Sure. Thanks, Maria. Yeah, I would have to say primarily the biggest difference is that with commercial real estate, from a bank's perspective, we are financing a tangible asset. So therefore, the building is the actual collateral versus the practice where the asset is the goodwill, which we do finance up to 100%. So for commercial real estate purchases by professionals or healthcare professionals, where the business also operates from, we can as well finance up to 100% of the appraised value or the purchase price, usually the lower of the two. However, it's important to note that the practice has to occupy a minimum of 50%. So like I mentioned earlier, they have to operate from that building. I would also like to note that each case is unique, and we are open to making exceptions and entertain owner occupancy below 50% where it makes financial sense. And a primary example, and as Cal alluded to, if all the tenants in the building, which are great tenants, are professional tenants, and the owner might not be 50% owner, we're still open to even finance and looking at it even up to 100%. Some financial institutions, like our own, have favorable programs specifically designed for professionals for both their practice and commercial real estate financing. Therefore, for an owner-occupied real estate, the key qualification is the income derived from the practice to service the debt. But again, regardless, like as I mentioned, every situation is unique. We can still, if required, can look at take into consideration the rental income. When it comes to practice financing, we look at the value of the practice, and the value is based on its goodwill. As I mentioned earlier, we do finance up to 100% of the value of the practice. How is this determined? Normally by the number of clients and the revenue generated from the practice. In some cases, in many cases, there is also equipment and assets owned by the practice, which is outside of the real estate, that is also included in the valuation. All of which are normally confirmed within a valuation that's done in the practice. So thank you for that question, Maria.
Yeah, no, I think that you hit it right on there, Tom. And we do see different scenarios, and work with different scenarios to make sure that we can find a solution. Thanks for that. Cal, over to you.
Sure. You had talked before about how certainly sellers are always interested in selling their shares for this lifetime capital gains exemption. You talked as well about how buyers like to buy assets because there's these write-offs and that sort of thing. Mm-hmm. How do people structure purchases? Like, what are the most common ways of structuring a practice purchase?
Yeah, Callum. So like for an individual, depending on the province that you live in, the capital gains exemption is worth, anywhere from $210,000 to $230,000 of tax savings. So pretty significant savings. And again, given the market that we're in, we're seeing a lot of share deals. And so typically you'd have that share transaction. The practice can be owned by a professional or a professional corporation, a PC. And the ownership of that PC really depends, again, on the province that you reside in, as each province has different regulatory requirements. Some provinces allow you to have a holding company own the shares of a practice company. You can bring in a family trust or even family members, whereas you can have some provinces where the professional has to hold the shares of the company in which the practice is owned. So it really depends on the province that you're in. And typically we would incorporate a company. You'd use that new company to borrow from the bank to get financing, and then that new company would purchase the shares of the practice, and then immediately after you'd amalgamate. And what that does is you're within the regulatory requirements in most of the provinces. You match that interest expense with the practice earnings. It gives you an opportunity to repay the corporate debt with after-tax corporate dollars, which are higher. You have more money to repay that debt if it's within a corporate entity versus owning a practice personally. And it keeps the structure pretty simple. And so, again, you have to look at the facts of each circumstance, but it works well for professionals who really want to repay that debt. And then down the road, once that debt is repaid, we would look at modifying or enhancing that structure to meet the professionals' evolving needs, depending on where they're in the journey of their business and their career. And really, the structures need to be flexible, and it can be changed if the circumstances are changed in the future. And something to note is that there is something called hybrid transactions. And so if you're in negotiating the purchase of a practice and both the vendor and the purchaser agree, you can have this hybrid transaction where both get what they want, the best of both worlds. Vendor gets to use the capital gains exemption, purchaser gets to purchase assets. There was a recent court case that seems that it does impact this type of planning, but it's important to note that hybrid transactions can be structured differently. It just depends. And so it appears that it impacts some and not others. It's early days. We're still working through the details on that. And then I think you wanted to know about real estate as well. So, I'm not a lawyer, but there are legal reasons, including liability protection with holding real estate in a separate company from your practice. Andrea mentioned that sometimes, you're wanting to sell your practice in the future, but retain the real estate so you can be a landlord in the future, and that is your kind of retirement vehicle. And so that's why you would hold it in a separate company. Doesn't mean that if you're in the midst of thinking about selling your practice and your building is in your company, that you can't kind of move it into another company. It's just that if you're close to a sale, it's very difficult to do it in a tax efficient manner. And then if you look at provinces like BC and Ontario, there's property transfer tax that you have to contend with. And, you know, you have to look at indirect taxes. If you purchase that building in the company that holds your practice as well, you might not be able to recover that indirect tax paid on the purchase of the real estate.
So certainly lots of issues with you looking at buying a practice or certainly looking at buying real estate. So look for people such as yourself, obviously.
Definitely.
Maria, I'll turn it over to you again here.
For sure. Thanks. Thanks, Cal. So this is a common question that came up, and we also hear around practice financing. For you, Andrea, what are some of the most important aspects when determining if a practice is worth pursuing? And from a due diligence perspective, what information is required from a purchaser?
It's a good question. Well, cash flow is always really, really important when it comes to, you know, deciding whether a practice is a good practice for you. You know, when you think about like somebody getting a practice ready for sale, the seller usually gets a formal valuation prepared, which, you know, typically details practice metrics like the patient base, the types of services performed, employees, their contracts, leases, etc. And the value is usually calculated on a multiple of EBITDA, which is basically the annualized cash flows to take out, you know, non-cash items, non-practice related items or discretionary items. And when we help our clients kind of evaluate a potential practice purchase, we go through the valuation with them and highlight the pros and cons of that particular practice, and, you know, ultimately put together a mini cash flow with scenario analysis so that they can see the impact of some of their decisions. So, for example, like if you're paying $1 million for a practice, the question is, will you be able to support the debt, you know, while you're making a living, right? Mm-hmm. What would happen if you lost some patients in the first year, or you're able to see some of the specialty work that's, you know, currently being referred out, or the impact of bringing in new patients because of the extra marketing that you're planning to do. So, you know, this cash flow is really personalized to the potential buyer, so that, you know, we could look at very differently depending on the buyer's risk tolerance, their specialty, and really their confidence in their ability to bring in more patients or do the work that they're currently referring out. And, you know, after the analysis, if our clients think that the practice is still right for them, then they submit a letter of intent, and we would wait to see whether the seller accepts. And you had a question about the due diligence. So if the LOI is accepted, right, it is really, really important to do your due diligence, because ultimately you made a decision to bid on the practice using the information in the valuation itself. So what you'll want to do is make sure that you're doing the due diligence to get some comfort that, you know, the valuation is a fair representation of the practice that you might be buying. So the due diligence generally is broken up into 3 parts. The first being a chart count itself to confirm the data around the patient base, like the number of active patients, the demographics, the type of services performed, etc. The second piece is the financial due diligence, which typically an accountant helps you with to compare the valuation to things like financial statements, tax returns, production reports, receivables reports, T4s, lease agreements, et cetera, so the list goes on. And then finally, there is the legal due diligence, which your lawyer will perform, where they would review the lease, the employee and associate agreements, look for potential lawsuits, et cetera. And logistically, you know, as soon as the due diligence period starts, your accountant and lawyer will typically, you know, email the list to either you or the seller's team to request that information so they can, you know, do the due diligence.
All the more reason to make sure we have, you know, the right specialists around for that advice. So thanks so much, Andrea.
Maybe I'll ask you, like, Andrew just went through all of the due diligence that someone would do in terms of preparing to make an offer or issue a letter of intent. When you get such a letter of intent where someone's obviously interested in purchasing a practice, what are the things that Scotiabank looks at to make sure that obviously the bank is going to lend? What exactly do you look for?
All right, thanks, Cal. And before I outline what we're looking for, I think it's important to mention that when someone's interested in buying an existing practice or a new practice or whatever, we highly recommend to first meet with a banking specialist and an accountant who as well specializes in this segment. And if the sooner the better. And ideally, in a perfect world, even 18 months prior to purchasing would really be ideal. Why? This allows time to be guided correctly, receive advice, and to be very well prepared to ensure that that purchase becomes successful. As for documentation, what we require as information contains from both from the personal side and the business side. So to start off with the business information, what we require, for instance, if it's an existing business, is the existing financial statements of the business. And if it's a startup, we would require the business projections. As well, an appraisal it needs to be conducted on the practice, on the existing practice, and preferably done by, not preferably, but really we look at the firm that does it to ensure that it's a firm that's reputable and has experience in this area. We also look at the legal structure of the practice, which is also helpful. For instance, is there a professional corp or a holding company attached to it as well? And a last bit of information that we look from the business aspect is the size of the practice, the number of existing patients, and as well the growth rate. From the personal side, we request for a personal balance sheet in order to demonstrate what the personal net worth is of the buyer. We require proof that ensures both personal and corporate taxes are up to date, and that the buyer has a good credit history. Another factor that might play a role and that we consider is if the vendor, is he staying, or are they staying in on the practice or not? If the vendor is not staying, we also look for a non-compete or a non-solicitation clause in the sales agreement. We also look at the experience of the buyer. That's an important factor as well. Are they new? First time, or are they tenured? These 2 points are items that we generally are very well outlined and explained in a detailed business plan. As well, a good business plan, and we've heard that earlier before, so I'll outline it again. I can't enhance the importance of having a good business plan, is to include other details such as working hours, number of staff. Even when professionals are looking to purchase an existing practice, having a business plan is still beneficial. Why? It outlines the new owners, the new professionals' vision for the practice, along with the previous points that were mentioned. These are all advantages when coming for financing the bank and when we do our analysis for credit adjudication. In the case of expansion on an existing practice, again, business plans and projections are very important. Again, like as I mentioned, preferably done by accountants who specialize in this field. The reason, again, we require a business plan, even though it's an existing business, is with expansion, the business plan needs to clarify the new or increased revenue, and the reason for the expansion. Are there extended hours? Are there additional associates or employees inside the practice? Is there a plan to increase the current client base or increase the services offered? All these factors translate in a new revenue source, and projections are ideally the way to analyze the impact on the business income. I would therefore conclude that working with a specialized accountant and working with a specialized banker in this instance to purchase is definitely a crucial element for a successful, buy. So,
yeah.
Thank you, Cal.
Yeah, I would definitely agree. I've done this for a long time too, so I think those are all valid points. So, Maria, I'll turn it to you again.
For sure, and we'll shift that. So, we got the banking perspective. So, what's the tax advisor's role in a purchase of practice in real estate? And Am, I'll turn it over to you.
Sure. Like I think the value that a tax advisor would bring is really around the structuring. And, at the time of purchase, it's to have an efficient acquisition and be left with a flexible and sensible operating model. And, if it's a first time purchase of a practice, it's a major change. There's a lot that goes around being a business owner. And so really the objective is to make sure that the structure is efficient from a tax perspective, but not overly burdensome. So it's a bit of a balancing act. And knowing that you don't have to set up a structure now and that it has to stay with you till kind of the end of your business journey. It's what works today and it evolves over time. I was talking to one of my partners in our Kelowna office and just talking about the evolution of the structure and how it changes. And he shared an analogy. He said, it's like a haircut. Like you might have had a haircut in the 90s that really worked for you, but it's not so much now. And so that's kind of almost like your structure is that you have to evolve based on the client's objectives, the changes in tax legislation, changes to regulations, and so it's ever changing. And also, if in a purchase you have to replace any equipment, then a tax advisor can assist on the buy versus lease decision and make those analysis for you so that you can make a well-informed decision. And, when you're buying a practice, incorporating a company, it does increase the amount of tax compliance and other matters that you have to deal with. So tax advisors can assist with the income tax side, indirect tax, so HST, GST, provincial taxes. There's payroll to look at and how that works in a corporate setting. So that's what a tax advisor brings to the table when you're looking to purchase a practice.
Very important insights, and I love that analogy. Thanks, Sam. Over to you, Cal.
Sure. I know Andrea had talked quite a bit about the purchase of real estate and some of the issues that relate to it. Tom, maybe I'll ask sort of for your thoughts in terms of clients who are looking to purchase real estate. What kind of advice would you generally give them?
Okay, well, how we started off is we explained to them a few factors that they need to consider before buying. And, in every situation, every client situation is definitely unique. So as a bank, what we do is we provide advice, and then we allow each person to make the decision if buying or leasing is the right choice for them individually. So, there are definitely advantages to buying. Firstly, most likely the building will end up as a positive capital future investment, capital gain investment. Property usually appreciates. It's an appreciating asset that can be sold for a profit. Another advantage is, upon retirement, it can still be kept, and the owner can still continue using cash flow to help them during the retirement period. A second advantage is that buying gives that potential for more revenue streams. For example, as I mentioned earlier, you can lease it out to other tenants, other healthcare professionals in the building as well. A third advantage of buying is that may give certain tax deductions. I won't get into the details of that. That's your guys' expertise. But again, there are certain benefits of purchasing a building. Another advantage is buying provides the owner the freedom to remodel as they wish, and as well, the bank is open to finance any remodeling, any leasehold improvements inside the building as well. And lastly, buying secures the location for the future. You can grow the patient base for a long term and avoids, by leasing, there's a disadvantage in that when the lease expires, the landlord can potentially not renew the lease. But there are some disadvantages to ownership, as we explained to our clients as well. And firstly, it requires management. You end up becoming a landlord. Are you interested in that? There's added responsibilities, maintaining the property, maintaining the building. You have to enter into lease agreements. You have to find tenants. So those are some of the disadvantages of owning a property. Some advantages of leasing is that it does allow and provide flexibility, on the location that you choose to go wherever you want. And that flexibility allows you to move to another location in the future should you choose as well. And another important point for leasing is it frees up capital to be able to equip your practice. So something to think about with leasing as well is that if you decide to move to another premises or are forced to move due to a non-renewal of the lease, your patients might not travel with you. So that's the last point that I have on the advantages and disadvantages for buying versus leasing.
Yeah, and I'll ask you, Tom had alluded to tax implications. So that's right. Your bailiwick. So I'll turn it over to you.
Yeah, and I think tax gets involved, Cal, once a professional has made the decision to invest in commercial real estate, really. And so our tax advisor's role is to say what's a efficient structure to hold that real estate. It's based on kind of what is the short-term and long-term goals and objectives of the professional around that real estate, around the structuring. Something to note is that immediate expensing or the accelerated write-off, those measures aren't applicable to buildings, and so there isn't an accelerated write-off around those buildings. The depreciation, it could be 4% or 6% depending on the type of building that's held, and really it's, do you hold it in a separate company within your practice? And if the real estate that you're thinking of purchasing won't be used in your practice, then you just need to keep in mind that if you purchase it in the company with your practice, it could impact your ability to use your lifetime capital gains exemption. And so, if you're renting it to third parties, then you really do need to consider setting up another company so that, you're not foregoing some pretty significant tax savings.
I think in terms of time at this point in time, I know we've got a number of questions that have come through, Maria. Should we, the questions that Maria and I had asked, thank you very much for your answers. They were fantastic. Maria should at this point in time maybe answer some of the questions that people have put through.
Yeah, for sure. So thanks, Cal. As mentioned earlier, we have allowed some time for questions and discussion. And just a reminder, if you have any questions, you can submit your questions in the chat box on the screen. Just type in your question there. And if anyone has dialed in, you can email emily.bird@scotiabank.com. So with that, and I should mention, if we don't get to all the questions, we'll leave you with some contact details, and in a post survey, you can also take advantage of that as an opportunity to reach out to us. So I do believe we have a question, Cal. Why don't you take that?
Sure. Sorry for cutting you off there. Anne, I'm going to direct this one to you. So we've got a question from someone in the audience who is saying that they are interested in potentially selling their practice to a child. Can you comment on that? I know you talked earlier about some changes in legislation.
Yeah. So I'd refer to Bill C-208, and that's certainly helpful in this context around selling a practice to a child. And so prior to Bill C-208, there is a large tax disincentive in regard to transitioning your business to a child or grandchild when compared to selling to an arm's length party. And what this legislation does, the way it's currently drafted, it aims to alleviate or correct this disincentive. And the purpose of this legislation is really to allow the transition of a business from a parent to a child, and then allow the parent to use their lifetime capital gains exemption, which could amount to almost $220,000 of tax savings, depending on the province that you reside in. But the first question to see if this legislation can be used in this transition, is there a true transition? Is the intention to transition a business to a child? And so if the answer is yes, then this is a great opportunity. For professionals, though, you need to kind of look at the regulatory bodies and see if you fit how to structure that deal. So you have to be in the same college in order to meet the requirements of, for example, optometry or dentistry. And so again, if you've kind of passed that hurdle or rule, then this is something that you really want to look into. These rules were introduced end of June, early July. We got a bit of clarity, but we know that the Department of Finance has said that these rules will change. And really, they're going to change just, again, to allow business transition. And so we know that the change will come at the later of November 1st or whenever draft legislation is introduced. And so we have a limited time frame to implement a transition based on these new rules. Again, we don't know what to expect, but what we're hearing is that they will maybe limit the ability to use these rules or just have more narrow application. And so, if you are looking at transitioning to a child, and you're within the same college, same regulatory body, I would recommend that you talk to your tax advisor right away, because November 1st is kind of the deadline most people are thinking that there is to be able to use this legislation and get those significant tax savings that weren't there before, June. So.
Good answer. And certainly over the years, I've noticed, I've had a number of situations where that actually does occur, transition down to a child. Tom, we've now got a question here as well. So someone's question is they've graduated and are looking at purchasing a practice, but they're somewhat concerned because at the same time they're looking that they would need to acquire a home for their growing family. What impact is corporate debt and personal debt, and how do you look at that when someone comes to you with all these sort of things?
Okay, well, yeah, so great question. So, debt definitely can impact the potential practice, the purchase of a practice. So, as I mentioned earlier, we do look at the credit bureau, and a credit bureau needs to be favorable. So if there are debts, high debts, and they don't turn over, that has an impact on lowering the credit score. Having debts as well speak to potential the character of the client. It might demonstrate that they are living beyond their means. So personal debt is another factor, and a very important one is it can even reduce their capacity of borrowing on the business side. We're looking like they have to take enough salary from the business to pay to fulfill their personal debts. Is that enough? On purchasing a house is a good debt. It's a good asset, and all we look at on that side of the debt is really just, do they have the capacity to pay the mortgage, and we take that as from their cash flow from their business. But that's a good debt, so that's not seen as negative in whatsoever, as it is an appreciating asset, and it's a required asset as well.
So in essence, every situation is different, but you certainly look at all of them, it sounds like.
We look at it all. Every situation is different. That's right. Like there's good debt, there's bad debt, there's different type of debt. We can restructure the debt. So there's different ways of looking at it. But we have to be conscientious of bad debt and having, we might have the capacity to pay. Maybe we could be a little careless and we just carry high balances. That does have an impact as well on the credit bureau. But every case is unique. Every case is different. It's not black and white.
Yeah, I think it's as Andrea had said, cash flow is everything. So if you're relying on your family's income comes from one source, which is a practice, obviously that business has to generate adequate cash flow to pay the bank back, personally and corporate for that matters.
Exactly.
Maria, I'm not sure if we've got other questions or if we're looking to perhaps skip some.
We do have a little bit of time here. So I have a question, actually, Cal. It's Edmonton, from Edmonton. A question around a question around what's the market like for selling or buying practices in Edmonton currently? And of course, if any panelists have any other insights from some of the other key markets.
Yeah, it's so I am in Edmonton here, so it's very much the same as in Toronto, where Andrea is, and where Maria and Tom are, or in Vancouver, where Am is. It really is a seller's market. There is lots of demand for practices, and you really have to be willing to be able to move fairly quickly in terms of making sure you've got your structure in place, as Am had talked about, speaking to your bankers beforehand so you're ready to make an offer. So it's competitive. There's lots more interest in buying than there are practices for sale. So that's not to say it's impossible to find a good practice. There's always practices out there. You might just have to look a little bit closer beyond just brokers. You may just have to ask suppliers, accountants, lawyers who deal in this business as well. So,
thanks for that.
Yeah.
Got another one here. We'll sneak another one in here actually for the panelists. What are some key considerations or information specific to buying a second practice? So someone considering, maintaining the first practice, but thinking about going to second practice. Any thoughts or things that, key considerations?
Well, Andrea, do you want to take that? Or Tom, sorry.
I'll just chime in really briefly on that. From a bank perspective, what we're looking at is, again, in their business plan, are they able, how can they demonstrate that they can operate two practices? We really look at that besides everything else I mentioned about cash flow and the ability to repay. But that's a key element that we look at now. How can you demonstrate in your business plan that you're able to operate two practices?
Okay, thanks, Tom.
From a tax perspective, I would just say you want to be able to keep as much flexibility. So if you're purchasing another practice, you may not want to buy it in your existing professional corporation, because what if you want to sell one down the road and not the other? When you have it in one corporate entity, again, you can split it up, but it's hard to do that on a tax efficient basis. So that's just something to keep in mind. And like Cal said, you have to make some decisions pretty quickly. And so I guess if you're not sure, the best way of doing it is setting it up in a separate company, and you can always amalgamate or wind up if you need to in the future, and always keeping kind of the regulatory requirements in mind on the setup.
Yeah, and from my perspective, again, it always goes back to cash flow. I think the nice thing is if you have a current practice that cash flows really, really well, right? It might give you a little bit of a buffer to invest in the second one that where you can be a little bit more aggressive on the bidding and maybe be able to cover some of the cash flows. Because sometimes when you go into a practice, it might take a few years for you to implement the changes that you do want to implement. So having that first practice can help you buffer that a little bit. But I think, on the other hand, I think some of our own clients, frankly, they go in wanting to buy a second practice with the best of intentions, only to find that, oh my goodness, it's going to take a lot of my time, way more than I thought it would. And some of our clients have sold their second practice because, it's just too much, right? It's the management it's just a lot more time than they thought it would be.
Great. Thanks so much to all the panelists. And just looking at the time, before we wrap it up, I do want to ask our panelists, what's one thing you want to leave with our audience today? And why don't we start with Tom?
Sure. Well, if there's a thought that I think I'd like for everyone to leave with today, I would say it's important to note that each client, each customer that we meet, their situation is different, both with their personal and business financing. Everyone is unique. Therefore, it's very advantageous to surround yourselves with the specialists and the experts to guide, inform, and advise, both for short and long-term financing decisions for their practice.
Thanks, Tom. Anyone else?
Sure, I'll jump in. I think the outlook for the healthcare industry is still really strong. So even though we're dealing with a pandemic as a society, I think there's still lots and lots of opportunities in the healthcare space. And I think with more opportunities, that generally means that there are more decisions to make, right? So I think having a great team of trusted advisors is probably more important than ever.
Definitely.
Yeah, and yeah, sure. So I think one thing we've learned over the past year and a half is that things change very quickly, and we need to accept that's just the environment that we're in, and that's very true from a tax perspective. Things are constantly changing. We have new legislation, so new tax rates, new planning solutions to meet your objectives, and the rules are very complex. So my advice to you would be to really ask your tax advisors to be proactive and ensure that you're in the loop on any of the matters that are applicable to you and can make a difference to you personally and to your business.
Well said. Thanks so much, Am, and thank you to all of our panelists, Am, Andrea, Tom. Thank you for a really interesting and compelling discussion today. And thank you, Cal, as well, for all your insights and being such a great co-moderator.
Look, and you as well. So
thanks, Cal. So look, we've covered a lot of topics today, and like I said, there were a lot of questions. So if we didn't get a chance to answer your question, or some questions have come up after listening to our session today, please feel free to contact any of the speakers today. We'll have our contact information up. And you can also reach out to us on the email us portion of the post-event survey that you're going to be receiving after the event. So with that, I'd like to welcome back Jason Charlebois for some closing remarks before we conclude our event this evening. Thank you.
Thanks very much, Maria, and a great job to all the panelists, Cal, Tom, Am, and Andrea. You guys were fantastic today. I'm sure that the audience from coast to coast really got a lot of insightful and useful information to help them in the planning decisions that all of you as participants need to be making. And obviously, hopefully, you've gained some trust in the expertise that both MNP and Scotiabank can bring to help in guiding you in the decisions that you need to make as business owners and professionals in the days, weeks, months, and years ahead. As Maria said, there will be a post-event survey. So if you can take a couple of minutes and give us some feedback, it'll help us know how we did today and what we can do better for the next event that you might get invited to. And with that, I'll conclude today by just saying thank you so much to everybody involved. Appreciate it, and have a great rest of the day. Bye for now.